Banks have slashed interest rates. At the start of 2024, they're around about 7.4%. Today, the one-year rate mostly is under 6%. That is a massive 1.4% cut that's going to save some families hundreds of dollars each week. But where will interest rates go in 2024, 2025 and beyond? That's what I'm going to talk about today in this video. Hey friends, welcome back to the channel. I'm Ed, an economist and property investor here at Opes Partners. And it's hard to understate how much interest rates have changed in the last few years. Only 3 years ago, you could get an interest rate of 2.19%, and then those rates rocketed up closer to 7.4%. On a $500,000 mortgage, that could mean that your payment has gone from $437 a week all the way up to $802 a week, an extra $365. That's right, you actually might have had to find an extra $365 a week or more just to keep paying your mortgage. And even New Zealanders on big incomes have struggled. Tori Whanau, the Mayor of Wellington, she said she sold her car to afford her high interest rates. But now interest rates are going the other way. Only 2.5 months ago, I recorded this video talking about how the one-year mortgage interest rate had fallen to 6.85%. And at the time, that felt like a big cut. But that's nothing compared to what we've seen since then. All banks are advertising a 5.99% one-year rate at the moment. Behind the scenes, some of them are even discounting this as low as 5.59% when you actually go and fix your mortgage. Now that saves a truckload of money. It could save you up to $141 a week on a $500,000 mortgage. Now that is around 7 times as much as most people got each week from National's tax cut. So all of us Kiwis, we're collectively breathing this just sense of relief at the moment. In fact, I was just speaking with one property investor and she was telling me about how she's been paying 7.2% on her investment mortgage, and the rate on her own home mortgage, that spiked too. And she said to me, Ed, it's been really tough. We've got a young family, we're paying over $500 more a week to the bank, and that money, it's got to come from somewhere. And I could just see that relief on her face, what it means to her and her family now that her interest rate has gone down and she's going to be paying less money to the bank. It means more money in her own pocket so she can look after her family. And her big question to me was, well, we've got some relief now, but where are interest rates going to head next? Now remember, interest rates are high because inflation was high. The cost of living, it was going up too fast. At one point, the cost of living was actually going up by 7.3% per year. So the Reserve Bank had to get aggressive. They rose the official cash rate 12 times in just 2 years. And to be really clear, New Zealand's central bank, the Reserve Bank, they have hiked interest rates before, but never this far and never this fast. Now, when a bank wants to lend you money for your mortgage, they've got to go and get that money from someone else. They either borrow money from people who invest in term deposits, they get it from overseas, or they borrow it through the wholesale markets. And all of this inflation, all of these increases in the OCR, that makes it more expensive for banks to borrow money and then lend it out to people like you and me for our mortgages. And so what do the banks do? They pass on those higher costs to us in the form of those higher interest rates. But right now, thankfully, inflation has fallen to 2.2%. We're back within the Reserve Bank's 1 to 3% target band, and that is why the OCR has started to come down. At the time of recording, the Reserve Bank has cut the OCR twice by a total of 0.75%. But it's important to recognise that the OCR, as I just said, has only come down 0.75%, while the one-year interest rates, they've fallen up to 1.8%, and the wholesale interest rates that the banks pay, they've fallen 2.1% from their peak. So how does that happen? Why is it that the OCR has only come down a little bit, but the interest rates you and I are paying on our mortgages have fallen by more than that? Well, here's the thing. Banks are money experts. They try to guess what the Reserve Bank will do next. So if they believe that the OCR is going to come down soon, they start changing their interest rates now. It's what we call pricing in. They're pricing in today what they think that the OCR is going to do tomorrow. And basically, here's the thought process. They think, interest rates are going to fall soon, so money's going to get cheaper. So maybe that means I can lower my interest rate today and I'll make a little bit less money, but I'll make more when interest rates fall. Now, why am I telling you this? Why is all of this important? Because the Reserve Bank plans to cut the OCR by another 1% in the next year. But that does not mean that your mortgage interest rate is going to fall by another 1%, because the markets are already expecting that to happen. So some of that effect, some of what the Reserve Bank is going to do over the next year is already priced in to the interest rate that you're paying today. So when you hear people, and it's usually developers, talking about, well, the OCR is going to fall by 1% over the next year, so take your current mortgage interest rate today, lop another 1% over that, that's what you're going to be paying in the future. That's not necessarily true.
I declare bankruptcy!
So the big question that you're probably thinking is, okay, well, where is my mortgage interest rate going to head? Well, if you'd like to see more of these interest rate predictions type of videos, do me a quick favor and hit the like button. That's how I know if these are actually the sorts of videos that you want to see more of, and to be honest, it just helps out the YouTube algorithm as well. Subscribing, that helps too. We are so close to hitting our goal of growing this channel to 20,000 subscribers. We're about 147 off. So what are my interest rate predictions? Well, ANZ reckons that the one-year rate will be about 5.4% by late 2025. That's about 0.5 to 0.6% below what they are advertising for the one-year rate today. Though, bear in mind, you can usually negotiate a bit off the rate that the banks are advertising. So I'm going to kind of say 5.3% by this time next year. So even though rates have fallen a lot over the last 2 months, like by 0.8%, I actually haven't changed my predictions much for where I think rates will be in a year's time. Now, I think by the time we get to late 2026, we're going to end up around that 4.9% mark. And when I was talking to one of my colleagues about this, she was like, what? Interest rates have fallen so much over the last couple of months. I was hoping they'd keep falling by another 1.5%, especially since the Reserve Bank plans to cut down the OCR to 3% over the next few years. So shouldn't interest rates keep falling by a lot? Think about it this way. The OCR peaked at 5.5%. The Reserve Bank forecasts that they might cut that down to 3%. So they're going to bring down the OCR by 2.5 percentage points. Okay, now let's think about the one-year rate. It peaked at around 7.4%. A 2.5% drop gets you to that 4.9% I just talked about. So that's roughly where I think the one-year rate will be in 2 years' time. Now, the good news is, even though the OCR hasn't been cut much, the one-year rate has already fallen a lot. So we're already getting the benefit of the OCR cuts, even though it hasn't happened yet. That's the good thing. The bad news is that because everybody expects the OCR to be cut, as the Reserve Bank starts cutting, if they just follow market expectations, that doesn't provide new pressure for interest rates to drop further. And look, it's a funny thing about all of these forecasts from economists, because us economists often get all of our interest rate forecasts wrong. And I actually mentioned that in my last video, because it was only about 6 months ago, I was speaking to a group of property investors in Nelson, about 150 odd of them. And the day before my speech, I called up some of the bank's economists just to ask them where they thought the one-year rate would be by the end of 2024. Now, they all said around 7%, and we know that since then, most banks have cut it down to 6%. So those economists and myself were way off. And it leads to that kind of uncomfortable truth for an economist to be admitting this, that we are almost always wrong. But we know that. So when we're giving interest rate predictions, we're often not trying to pick the exact interest rate and get that right, because we know we can't do that. But we are trying to pick the general direction. Though I will say, if my predictions are right, a person with a $500,000 mortgage would save around about $190 a week compared to the peak interest rates. Now, whether that number ends up being $90 a week, $190 a week, or even $290 a week on your mortgage, the general direction is that your mortgage should be getting cheaper.